Hi everyone, and welcome to another quick take video. Today, we are looking at Woolworths. So it's a big retail chain in Australia and New Zealand. Yeah, I believe it's actually a South African company. Anyways, it's a grocery chain, so it's really big. It also owns Big W. Again, it's a retail, but it's more of like clothing and stuff. While Woolworths, it has Safeway and Woolies. That's what we call it in Australia. It sell grocery goods, food, and all of that stuff like green vegetables, frozen food. You know what a grocery store is, really. So from the look of it, it owns around 3,292 stores. So that's a really big operation. Its main rival is Coles, which I did a quick take on. So let's have a look at Woolworths. So Woolworths PE ratio is 44, which is a little bit higher than, well, not a little bit, it's double that of the industry. I can't remember what Coles is, but it'd be worth a look to compare between the two competitors. So it's definitely higher than what we would like to see. But let's see what else it has going for it. So we have a quick ratio. Quick ratio here is a little bit low. Basically, it only is gonna last only like quarter of a year, which is around 3 months. And it does a dividend yield of 2.28%. I believe Coles also pay dividends. Again, I don't remember what it is. But let's double check the dividends through the ASX. Yeah, dividend is 2.27. It's 100% franking. Again, that's a really good sign. 100% franking. So you want these kind of companies that pay dividends at 100% franking, so you can get franking credits back when you do your tax. All right, moving on to the cash flow. Let's see what it has to offer. So it's been a good year for Woolies. I mean, with these kind situation where Woolworths are considered. So Woolies is what we call them in Australia. I'm not sure how New Zealanders call them. If any of you guys are Kiwis, let us know what you call them. Call Woolies, Woolworths. Maybe you got. I know you guys have Safeway over there instead. Anyways, it's a good year for Woolies and Woolworths and Woolies and Coles, just because it's with all the other businesses shut down. These kind of businesses are considered essential businesses, so they get to remain open, and people still have to buy food to eat, to live, and actually there's stockpiling that happened when the pandemic kind of just started out and Australia went into lockdown. So investing activities, again, we want to find out what exactly is it investing in. Is it investing in new technologies, or however? So these would need a little bit more of an in-depth analysis. Financing activities, it's paying back debt. That's always a good sign. And net change in cash is $1 billion. Again, from the look of it, it's through operation, which is again a really good sign. Oops. Okay, moving on to the balance sheet. So the balance sheet current asset is looking really good. Cash has doubled. Again, that's a good thing. So we want to know why the quick ratio is so small. It's because there's a lot of liabilities here, and I believe if you divide that through, you should get the same number. Which, let's do that for calculation's sake and for our own kind of certainty. So 2602 divided by total 13,191. Yeah, so it's around there. So they must have added this cash and cash equivalent. So we could do that also. 2068 divided by 13,191. There you go. It's around there. Now total inventory stays the same. Stay relatively the same. Again, with these kind of companies which store perishable goods, so the Big W brand probably doesn't have perishable goods, but definitely the grocery retail side of it definitely gonna have perishable goods. And you want to know what's the turnover compared to the inventory. So a surrogate for turnover could be the number of sales. You want to see the rates here, the rate of sales exceed that of the rate of inventory. So from the look of it, actually, it looks like it does, because 2602 divided by 1111, that's 2.3 times, while 4434 divided by 4280, and that's definitely a smaller increase in total inventory as opposed to the cash and short-term investments. So that's just a rough thing to see, like if it's actually have a good turnover. For some, from the look of it, does look like it's turning over its inventory quite well. It's just increasing the amount of inventory because it's expecting to have more sales. So total liabilities, long-term debt. So long-term debt has increased dramatically. Again, you want to see what the components of those debts is. The bank at the moment probably be best to borrow from the bank, just because interest rate is so low. I wouldn't do kind of like what is it? Kind of like issuing corporate bonds at the moment, because you could probably do it, because again, interest rate is low, and maybe people want to buy these corporate bonds to get interest back, and because interest is so low, there's definitely advantage in selling bonds, and you could sell that at 2% of the face value, interest rate of 2%. All right, quickly run through the income statement, and we'll move over to the chart, and at the end we hope to conclude if it's a good buy now, or let's see what's happened. Oakley dokley, revenue's gone up. Again, that's really good, and we can just do the see what's the growth in revenue is. So 6%. 6%, it's okay. You want ideally you want a double figures, maybe 10 to 12%, but at least it's growing. I think that's the most important thing. All right, so net income, let's go straight down to net income. So net income has reduced, so that's you want to know why. So I wouldn't say it's a bad sign, even though total revenue has gone up, net income's gone down. Is it because of like extraneous activities, like extra? I think that's what it's called, like extraordinary items. That's what they call it. So maybe he's investing a lot in something this particular year, so it's that's why. But but the net cash flow is kind of there, gone positive, which is always a good thing. We can just have a quick. There's no research and development, interest income, provision, minor. Yeah. Okay. So you want to have a look at this more in depth. Okay, moving on to the chart. So here is Woolworth. Chart looks different, doesn't it? I just want to see this net income. Yeah, no, that's correct. Yep. So this is the net income of the company. It's gone up, and then it's kind of gone back down. So you want to know why that's happening. Is it because it's losing out to the competition, like Coles? Personally, I shop more at Coles than at Woolies. I do come into Woolies when I can't seem to find Coles. I do live closer to Woolies than a Coles, so nowadays I do more my shopping more at Woolies. But I do prefer Coles stuff more, especially the roast chicken. Anyways, moving on, a little bit of a rant right there about the roast chicken in Coles. I do this wrong all the time. It's almost like the USB thing. Anyways, looking at this, so during the lockdown, it dropped to 32. Now it's 42. So that's like almost 33%. So that's a really good gain. I think during the drop, if any of you guys buy, guys and girls bought it, then I think you would have made a substantial amount of money. At least 30 to 40% growth in your portfolio. But in 2016, it was sitting as $20. Now it's up to 43. It looks like that's it. Is it? Okay. Internet is very slow today. Sorry, guys and girls. So it's dropped down to this 50% mark, and now it kind of rise up. I reckon it's gonna keep going up to the $43 mark. So that's around 10%. So in the short term, I reckon that's a good thing to go in, but just be careful of the current macroeconomic factors. So I just want to quickly calculate exactly. So let's say we'll go back up to 43.78 divided by 40.99. So 6%. Oh, really? That's fantastic. 6% even better than I saw. Actually, no, I said 10%, didn't I? So no, it's a little bit less than what we were expecting. But 6% growth in probably maybe I reckon 6 months. So if you double that, that will be a 12% growth per annum, which is not bad growth really. And yeah, so do I think it's gonna retrace? I don't think so. I think it's already done its retracement, and now it's just gonna keep going up. There's nothing really here really to kind of stop it. So I think it was thinking if it should break this point here, even though it did, and then it feels like a fake out, but it's definitely broken through. So there's definitely some support on there, that level here. So if it does dip down, it probably dip down back to 40 before it keeps continuing to go up. So that's my guess of it. And we can draw a line to see what's happening. Yeah. So if it does drop back down, I reckon it's going to drop back down to, yeah, or it could probably drop down to the 38 levels before keep going up, because now it's forming. It got a support at the $38 level, and it will continue to go up. And I think over the long term, I think it will just continue to go up. Not exactly sure what happened here for it to come down, but that's what reading through the historical records and annual reports will tell you. And it's forming a nice, so maybe, sorry, I'm gonna take that back. It looks like it's might hit this support on this resistance on this trend line here, and it's probably gonna come down to the $38 level before going back up. So all right, let's get out of here for a second. So it looks like it's not oversold yet, but it's definitely tapering off on that momentum there. So overall, I reckon it's a solid company. It's in the consumer staples area of the market, and people are going to buy food, and I think it's big enough and it has good brand recognition. So then I don't think that it's gonna fail, at least anytime soon. It's definitely at 2.4% dividend yield. I think Coles is a little bit better, so you want to weigh out where you want to put your money, either in Coles or in Woolworths. So that's something that you need to do your own research on. But yeah, I wouldn't buy now. I would wait for maybe a couple of weeks, see where it goes. But it's definitely on its upwards trajectory. I would let it retrace just a little bit before jumping in. And that's pretty much for today's quick take video. I hope you guys and girls like what you see here. And if you do, please share, subscribe, and hit the like button. I greatly appreciate that. And if you have anything to discuss, leave it down in the comment, and I'll get back to you if you have any requests or any questions. Thank you so much for listening. I hope you have a great day trading. Take care.